All right, we're going to break down some of the changes to the 2025 tax code. Let's jump right into it. So standard deduction has gone up by $400 for individuals and $800 for a married filing jointly. That takes the adjustments up to $15,000 and $30,000 respectively. 15 for individuals, 30 for married filing jointly. Now, a standard deduction is automatically given to everyone. It reduces your taxable income. So for example, for an individual who makes $50,000 a year, they're going to have a standard deduction of $15,000. That is just automatically given, and it is going to decrease your taxable income down from $50,000 to $30,000, $35,000. Now you can itemize. That is staying in place, and there is still no limit on how much you can itemize. Now, to be clear, you only want to itemize if you can get above the standard deduction. So let's take a look at the expenses that you can itemize to see if you can get above that standard deduction. So I'm going to go over here to the computer. Now, if you go right here, this is on TurboTax. Right here, you can itemize your mortgage interest on you pay up to 2 homes, your state and local income or sales tax, property taxes, medical and dental expenses that exceed 7.5% of your adjusted gross income, and charitable donations. So if you have expenses in those things and you add them up and it ends up being more than the standard deduction, then you can claim itemized deductions and reduce your taxable income by greater than the standard deduction. Now, if you're using a software like TurboTax, it can be pretty simple. You can just go in and put in those those itemized deductions, and TurboTax will tell you if it's better to keep the standard deduction or to use your itemized deductions. All right, let's jump back to the IRS website. So I've got it up right here. Marginal rates for taxes have been adjusted for inflation. So this shows that now it's 10% for tax for income up to $11,925. Now in 2024, that was like $11,600. Now you'll see the married filing jointly over here. Those all increase. So you'll see a jump in each of these thresholds. So essentially the government's saying, hey, because of inflation, we are going to tax you at lower rates for further on your income, right? So instead of being taxed 10% on $11,600, we're going to say you're going to be taxed 10% up on income up to $11,900. So this should reduce your taxes a little bit. Now, I want to make sure that you understand what a marginal tax rate is, because a lot of times people will look at this and they'll be like, man, right here, this $48,475, that's 22% tax on income over $48,475. A lot of people don't realize that keyword, that over. It is only on income that is over $48,475. So if you make $49,000, that does not mean that all of your income will then be taxed at 22%. That is not how the tax law works. So bumping up into a higher tax bracket, while yes, it sucks that you're being taxed higher on that income, you're not being taxed higher on all of your income. So it is not necessarily something that you should try to avoid. Now, avoiding taxes legally, all for. You should avoid taxes legally as much as you can. Now, you should not evade taxes because that gets you in trouble with the IRS. So, for example, on this one, if I made $49,000, my first $11,925 is going to be taxed at 10%. And then after $11,925 and up to $48,475, I'm getting taxed at 12%. Now, that $525 that gets me up to my $49,000 income, only that $525 is taxed at 22%. So it is marginal. Only the amount that goes above it is being taxed at the higher rate. Okay, and I've made actually a longer video on this, so if you want to go check it out, you can. But 401k contribution limits have increased by $500, so you can contribute up to $23,500 into a 401k. That's the new limit. Now, with employer contributions as well, you can go up to $70,000. The crazy thing is I thought this was interesting. You guys will have to let me know what you think the thought process on this was. But 401k contribution limits have increased, but there's no changes in IRA limits. That stays at $7,000 per individual or $8,000 if you're over 50. You can do $1,000 catch-up contribution. I thought that was kind of crazy that IRA limits stayed the same while 401k contribution limits have increased. I thought that was interesting. Now, one of my favorite investment / saving tools had got a boost and increase as well, and that is a health savings account. That's a HSA contributions. That increased from $4,150 to $4,300. So that is increased per individual. Now, married filing jointly, you can pretty much double it. I think the married filing jointly limit for 2025 is $8,550. So it jumped as well. Now I'm going to have a video coming out soon on HSAs and why I love them and the benefits of them. So look for that, as it's going to drop pretty soon. Some other things that have increased as well is the estate tax. If you come down here, estate tax credits has gone up to $13,000 or $13,990,000. That's an increase from $13,610,000 in 2024. Now, what this means is if you have inheritance that you are leaving to your family, that first $13,610,000 is completely tax-free. Now it's going to be jumping up to almost $14 million, that $13,990. That is completely tax-free. Now, if you're leaving any money in excess of that, that is when it's going to be subject to estate taxes. What are your guys' opinion on estate taxes? I think it's ridiculous that we can be taxed throughout our life and be taxed on all our income, save a bunch of money, and then we go to leave it to our family, and then our family's taxed on it. I think that's kind of a joke, but what are your guys' thoughts? Hit me up in the comment section. Now, a tricky way, I guess it's not super tricky, but a way that you can avoid some of that estate tax is if you think you're going to be over that and you want to start giving money to your children or to your grandchildren, you can give them gifts, and there's an annual exclusion limit that you can give gifts, and it's $19,000 for 2025. And that's rising up from $18,000 in 2024. You do have to be careful, though. There is a lifetime exclusion. So you can give $19,000 a year, but you can only give a certain amount in your lifetime to an individual. So be careful about that. But that has increased as well. Now, that's what's slated to happen in 2025 thus far. But we also have Trump going into office, and he has some interesting ideas as far as income tax goes. He even floated this idea on Joe Rogan.
Did you just float out the idea of getting rid of income taxes and replacing it with tariffs?
Well, okay.
Were you serious about that?
Yeah, sure. But why not? Because this country can become rich with the proper use of tariffs.
So we may even see a drastic change in the tax code if Trump is able to go in and make some changes. Now, that is going to have to be ratified by Congress. And so it's going to have to go through the House and it's going to have to go through the Senate, which are both Republican majority, but they are pretty slim. So if you have any Republicans that are going to go against it, that could change things up a little bit. And these are big changes, so it's going to have to go through Congress. So we may see more changes, but this is what's going to happen thus far. Thanks for watching. If you found any value in this, please hit that thumbs up button. It helps the algorithm know that I'm putting out good content. Thanks, and we'll catch you guys next time.